Here's a trading tip for locking in profits. Hi, it's Charlie giving you Tuesdays, Wednesdays video whenever this will go out. And so this is just a little tip for, it doesn't matter whether you're a day trader or you are swing trading. And if you're getting to a point where you know that you would be happy to bank profits, but let's, for argument's sake, say that the market looks like it's coming up to a major level, and so price has been coming up. Let's say, for argument's sake, to the major level, and you know that this level is either going to repel price back down, or it could have a little breakout and have a nice run. So what do you do in this situation? Well, a simple trick would be to just aggressively move your stop loss up as price gets close to that major level. So you're aggressively moving it up to a point where, okay, if it does roll back over, fine, you've locked in the majority of your gains. But if it breaks out, then you could then end up squeezing a little bit more out of the trade. So it's you only do it when your price is around a key level. So it could be around maybe a round number level where you know that that's going to be a psychological level, or it could be a technical level of resistance. And again, you don't know if price is going to get rejected or not. So, and it's always down to context. It depends on whether that's where you're happy to bank anyway. So it's all about, well, if you're going to move your stop up aggressively somewhere up here, you've got to be happy with price just coming back up and stopping you out, even if it may come down a little bit and then goes back up again or whatever. So you've got to be at that stage in the trade where you say, do you know what, I've had enough out of the trade anyway. It's been a good trade, and if it does, I'm going to go for the aggressive approach. I was going to come out at this level anyway, so I'm just going to move my stop up, just a small amount below that key level, but with the potential that it might actually break through that level and I might actually make more out of the trade. So that's the whole philosophy behind the trade. If your target's right up here, well, there's no point in doing that and aggressively moving up your stop that much, because then you're almost guaranteed you're going to get stopped out at some point. Anyway, even if it comes up a bit, then it might do a bit of a retracement, you get stopped down, it goes higher. So it's got to be at a major level where you were looking to bank profits anyway, and all you're going to do is aggressively move that stop. So again, like I said, you can do this. I've done this with our traders on an intraday basis, actually more so with any intraday trading, but sometimes on swings as well. And here would be a good example down here. So and here's a good example up here, and I'll explain why in a second. So firstly, this one here, why would this be a good example? Well, this is on the daily chart of the euro, but if I go to the weekly chart, what that level represents is this level here. It's when the euro dollar came down earlier this year and it hit that weekly, this is the weekly chart now, the weekly 50. So that weekly 50 is right back down. If I come to the daily charts, is down at this level here. That's when it hit that weekly 50. So if you had, for argument's sake, been short and you were targeting that weekly 50, now you don't have to, you might be more than happy with exiting at the weekly 50, and that's absolutely fine. I'm just putting this out there as a training video to say, well, this is an option if you're wanting to be more aggressive. So as it came down to the weekly 50 and you were let's say you were short, then you could aggressively move your stop down to a point where if it bounces just a little bit, you're going to get stopped out. But if it plunges down, you might then be able to make that bit more out of your trade. So you don't want to be in a position where you're going to give too much of your profit back. So it's going to be aggressive, and in this situation, as we can see, it did indeed bounce, and so therefore you would have just got stopped out. But that doesn't matter. That's not what it's about. It's about putting yourself in that, rather than banking, putting yourself in the position that what if it just collapses through that level and breaks through. And it's the same over here. I'm picking this level here. This was a key level, this horizontal line. If I actually go out to a monthly chart, you'll see what I mean. It's been on my chart for quite some time. That's that level I'm just talking about here. This was the beginning of the year. I'm now on a monthly chart here. But you can see it lines up with lots of touches going back through the years. Okay, so that was a key level when price was coming up to that again at the end of last year. So if we take this back to the daily chart, So at the end of last year and into the beginning of this year, this was a key level. So again, if you were long, what could you do? Well, you could either just bank your profits, and again, nothing wrong with that. But another little option would be, if you've been in a long position, you were going to target this level anyway, but well, as it comes into that level, trail your stop up to, I don't know, the last low, or even more aggressively than that, and say, right, I'm going to aggressively move this stop up to a level, and if it just comes back down, fine, I get stopped out. So I'm not giving too much of my profit back, but if it had have broken higher, then I can squeeze some more profit out of that. That's the concept, and you can't do it on every trade, of course, because it's only when if you're in a trade and you're trading up to a key area of resistance or a key area of support, and you were going to use those levels as an exit. And instead of exiting, just aggressively moving that stop up, so that it doesn't matter if you give back a little bit of profit, but if it does want to break through, then you could get some more out of the trade. That's the idea. And again, like I said, you can use this on intraday as well. It's just an idea there, which now and again I have employed. Hopefully that's of use. A little technical video there for you today. Give us a thumbs up if you like these videos, and do subscribe to the channel, because it does ensure that you receive all of our videos as they are released. Take care for now. I'll see you later in the week.